I like to pull back when I think about what it'll take to have investors invest in driving climate. And so the world needs to get itself to 1.5C. That requires getting the world to net zero at some point, 2045, 2050. If one could be king for a day, probably the simple answer would be to have government play the role of setting a target for carbon and then letting the market decide the best technologies over time. We're not quite all the way there. Focusing on the United States, what I see going on is that there is action taking place, and particularly with the federal government having implemented the Inflation Reduction Act and the bipartisan bill and tools like that, along with policy, right, like the goal around the NDC of 50 to 52%. There are signals coming from government. There's investment. It's probably not quite as strong as having a firm target and then letting the market decide, but that is creating a system where there's a signal for businesses, there's government funding to help bridge the gap, and that importantly makes these investments economic. Maybe not economic relative to current markets that don't internalize the cost of carbon, but economic relative to the endpoint that we need of the net zero transition. And so at the end of the day, we know the world needs to get there. We know the world's going to need lots of tools, all the way from clean electricity to electrification, a lot of the economy, to low carbon fuels for things that are hard to electrify, to a strong electric grid, to demand side tools. Need all of that, carbon capture and sequestration. We'll need all of those tools going on, and the most affordable answer to get to net zero is a combination of those that's attracting investment capital today. At the end of the day, the business models that we will need to get there is a combination. It's partly government mandate and regulation, partly government incentive, partly private capital, certainly public-private partnerships for technologies that are more nascent. They're going to need that help. Where first of a kind is not going to feel economic relative to current market. So really need all of the above. Example, in our home state of California, for us as Edison International being an electric power company, there's been tremendous support from having clear legislation and regulation setting targets. There's a role that then our electric utility at Southern California Edison has played in going out to the market, seeking resources, providing power purchase agreements that then developers can take and go finance, right, to build new infrastructure. That's one model, right, for third-party generation. Another model has been that same utility deploying our investor capital under a rate-regulated compact to build the grid infrastructure to connect the resources. So multiple models are come into play here. And finally, there's lots of new technologies that we'll need to invest in and mature. Our company has played a role in providing seed capital for new technology companies, providing us venture investment to help bring new technologies to the fore. I don't think that the looming supply chain challenge around minerals is necessarily going to derail the transition. It's definitely a bump in the road, but it's also a market signal, right? And so even between last year's CERA conference and this year, I'm seeing a bit of a shift in terms of the concerns around the copper market last year. I think are gradually translating into more investment and more focus on technology to have smarter mining, right? And better ore recovery and whatnot. So maybe I'm an optimistic, firm believer in the power of technology to help solve problems. And particularly when you have something like a supply chain crunch, that does send a signal to the markets. Ultimately, markets respond. The clean energy transition is happening. It's going to hit bumps in the road. There's big challenges, whether it's supply chain, whether it's the permitting process. Here in the United States, we need permitting reform. It takes us 10 or 11 lines to build a transmission line. Only about 2 years to construct it. The rest of that time is a little bit of engineering, a whole lot of permitting and siting. Those are bumps that need to be addressed. The pace right now, it's accelerating, but it's not fast enough yet. We did analysis just looking at California, which is the world's 5th largest economy. California not only has a net zero target in legislation for 2045, it has an interim target for 2030. We put out a paper called Mind the Gap a couple of years ago that said that California has done a good job over the last couple of decades. It's reduced emissions about 1% a year, with the economy growing 3%, but it now has to quadruple that emissions reduction rate in order to get to the 2030 target. So we need to go faster. At the end of the day, Will we get there right by 2030 for that interim target? Will the world get there by 2045 or 2050? I don't know, but I think that there are forces aligned. There's a sense of conviction that we need to do this, and not to be dramatic, but this is about the safety and well-being of humanity. If we don't get this right, there's a much bigger problem, so therefore I believe we will get it right in time.